Can-Am, what's happening? Okay, and live on another device. Okay, that works. Well, what device was that? Restream. Let's check that out. Okay, the 10-minute trader. Dividend stock talk. The 10-minute trader. Uh-oh. Hey, Jacob. Why does it say they're all offline? Or do I have to reboot this thing?
I don't know what you're talking about.
It's
If you're talking about restream from the internet, ignore it. I already showed you through OBS that everything is working.
Yeah, okay.
I don't want to go back in there and show him something for like the fourth time, the exact same thing.
Let it roll, Eden. Here we go, loop-de-loo. All right, let's get this one out of here because we're not using this one yet. Give me, oh, wait a second, this one's not live. That one's live. And this one is live. Okay, so we're moving right along. Oh, this doesn't want to come unplugged. That doesn't want to come unplugged. I got it. It's all working now.
It is? I'm
Yeah.
just going to double check
Who do you have?
something.
LA Soundwave. Your TikTok went south, he said.
Hold on. I want docs, restream channels.
Doggy.
Restream channels shows.
Ooh. Let's do this right here. Give me a second, guys. We're still getting warmed up, getting new software here, make things look interesting. Go all the way back to the beginning, and here we got here. Derek, on the quest to be the
Streaming.
crypto crafty. Yeah,
One of your
good.
TikToks couldn't connect.
Dividend stock talk. That's the one that's right here.
I got him on TikTok.
So the 10-minute trader is there, and dividend stock talk is right there. Ooh, we got people over here. Hey, everybody on Instagram. Uh-oh. I gotta send Joan something. All right, thank you, thank you, thank you. All right, so give me 1 second. I have to send a link to someone. I am from Bangladesh. Well, hello to you. All right, so how do I do this? How do I share this? Share. Good connection, good connection. Okay, hold on a second. All right. Don't. Dividend stock. 1 second, guys. I'm almost there. I want to learn trading. Yep, we'll be here. Today was a good day for America. We have been unburdened by the past. All right, almost second, almost done. There we go. Okay, now back to where we were, Here we are. Cool. So let's see who is here today and go from there. Before we do that, let's get started. Greetings from Arizona. Hey, how you doing today? Gonna try the glasses today only because I can stand here and read that. But then again, I gotta take it off here to look at this down here. All right, so we're trying 3 screens. Get this out of here. What is that? All right, that doesn't want to work. All right, evening. Sweet Jones, what's happening? All right, let's get started. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-minute trader. Now, here I am. I invest in dividend stocks for weekly cash flow. I'm looking for a simple, safe, predictable, and consistent 1% per week. Are you kidding me? Down to 40? It looks like we have to reboot this one. Okay, you guys, don't go anywhere. I'm going to reboot this. Okay, just sit tight. Uh-oh. Sit tight. Oh, what the hell? Just leave it alone. Is what it is. All right. Reboot if we have to. All right, so I'm looking for a simple, safe, predictable, consistent 1% per week. Now, you may be asking, what's with the glasses? Well, I added a new screen to be able to interact with the people on YouTube because we have a couple of channels that we can't interact with. So I had to come up with another screen. So I got a screen there, a screen here, a screen here, and then 6 cameras here and 1 camera down there. So we're kind of getting things all over the place. I'm just getting ready to learn how to use this software, and it seems to be working just fine. So let's keep on going, see who's here tonight. Moses Deande, Spanky, William, Boring Objects, cool. King, David Pryor, how are you doing today? KG's here. Gapilla, Chuck's in the house. Everybody, Chuck's in the house. All right, let's get started. Let's finish up where we ended off last night. Safety glasses. It's a dangerous room at times. Yeah, I get that. No, it's so I can see far away, which is kind of senseless because then I have to go like this. Hey, Texas Brown-Eyed Girl's here. Because I have to use it to see the screen over there. There's a screen over there, and it's a huge screen. But don't ask me why I need the glasses. But I do. I need the glasses to see far away. Yeah, is what it is. All right, so let's keep on going. Bo. Bo's here. Alex Damack. Okay, Dean. Olive. David. Jack the X. The exec. Jack, what's happening? Emin? Ooh, Verizon numbers. Friday. Okay, well, let's take a look at Verizon, see what it looks like. Catherine, Angie, Charlie, Mitra Gahel, okay, Chap Stevens, Tinker, Tim. All right, so let's take this look. Take a gander at Verizon, VZ. Up over here, VZ. VZ. Now, first thing, always, I always want to see. David, what's happening? The high of the year, the low of the year. Where was it a year ago? Where is it now? I'm going to open this up just a little bit more so I can see that a little bit better. There we go. That's a little better. And I want to move that over just a smidge. All right, that's good enough. Works for me. All right, so the high, the low, where was it? Where is it? Look at the direction. Sideways, up, down. All right, what's happening here? This is the last week. Which was last week? Well, we want to see what's happening here just in case this thing turns around and goes back up. Emin, you bought a ton of Verizon calls. When are you going to start? I'm starting right now. Where have you been? We're taking a look at Verizon. Now, Verizon is currently at 38.78. All right. Now, before we go any further with the chart, because there's a lot more that the chart tells us, but we're going to get to that in a second. Before, we want to see what the numbers look like. Because if I'm going to buy this tomorrow, I want to make sure that is an investment that I'm okay with. Which means, am I getting my 1% this week if I invest in Verizon? Well, let's check out the numbers. If I'm going to buy it, here's the price, $38.91. So the closest strike price is going to be the 39. Look at that number, 70 cents a share. That's more than 2%. Now, if I can get 2% every single week, well, that's over 100% per year. So ask yourself the question, 2% a week is over 100% a year. This is Verizon. I'm pretty sure everybody in the audience knows who Verizon is. So here's the thing. If I buy it, sell somebody the right to buy it from me for the exact same price I just paid for it, and I'm collecting 2%, well, why wouldn't everybody? I mean, think about it. Okay? Why wouldn't everybody? If you can make 2% every single week, that's over 100% per year. All right, well, let's take a better look. Now, we know the numbers work. Fine. So, let's check out the chart. What is the chart telling me? Well, simply put, a year ago, we're at 39.50. Look at the high. The high didn't hit. Wait a second. Wait. Why can't I see that? Why can't I see this? There we go. Okay. So the high of the year was 45.36, and that was the end of September. So from the end of September, she drops, retraces, drops again. Look at this. Here's the high. Here's the low. This is the low of the year. Now, you're going to make most of your money in the stock market buying low and selling high. Well, if the low of the year was just a couple of days ago, well, it's still going to the upside because you can't get any lower than the low of the year. All right, so let's zoom in, take a look at the last 30 days. Now, today's the 20th, so we want to go back to December 20th. Where's December 20th? Right there. Here's December 20th. Okay, so December 20th, we're here at 40 bucks. Shoots on up to $40.60. $40.60. And then she drops down to here to $37.50. Now you get 1, 2, 3, 4, 5. 5 days to the upside. Well, 5 days to the upside works for me. Okay, so ask yourself the question. If the 30-day high is here, this is the low of the year, and she's slowly working her way back up. Now, if I buy it tomorrow morning, $38.90 is what I expected to pay. So at $38.90, the closest strike price. Hey James, what's your thoughts on STX? STX, that's Seagate. STX, hold on a second. STX. We'll take a look at that in a minute, all right? But let's back to where we were. Now, if I'm buying it tomorrow morning at $38.90, the closest strike price is going to be the 39, and that's right here. And look at what it's getting, 70 cents a share. That's a little bit less than 2%, okay? Because 2% would be 39 and 39, that's 68, 78. So it's going from 70 to 78. So it's almost 2%, not quite. But almost 2% is not that bad if you think about it. Because 2% is 100% at the end of the year. 2% every week. Now, today is actually week number 4. Week 4 of the first quarter. All right, so fine. Here we are. So I like it. Let's see what a covered call would look like using Verizon. First thing I want to do is get rid of this right there. Change this. Now, Thinkorswim is one of the few trading platforms that's like kind of like a set it, forget it, everything preloads by itself. Well, if I change the spread where it says single down to covered call, now a covered call is one of the safest trading strategies there is. So a covered call, there we go. Now remember I said I like the 39? Well, the 39 is right here. 38.20. All right, now just want to do one contract, because if I do more than one contract, you guys might panic a little bit and say, "What? That's too much money." So we're just gonna do one contract. Okay, if you can afford to do more than one, fine, do more than one. But one gives you a good idea. Then I'm going to change this right here from a limit order to a market order. And here's the reason why. A market order will get filled instantaneously first thing tomorrow morning. Market opens 9:30. This thing will fill by 9:31. Now a limit order, well, that could sit there on the market maker's computer for hours. It could, because it depends on what it opens up at tomorrow. And if you have a price that you want to pay, there's a lot of different ways of looking at it. Now, a lot of people say, a limit order, you can get a better price. Well, I'm not looking to get a better price. See, I already have it set in my mind, I want 1%. However I get that 1%, my time is my most valuable commodity. So if I can save time, okay, and just do the covered call at the market order, get it filled, get it done, get it over with, great. I don't want to sit in front of my computer. I don't. If I did, I could make a lot more money. But at some point in life, money is going to change its meaning. Okay, it may be hard for you to understand that, but at some point. There was a movie, Pretty Woman, where Richard Gere and the old guy, it wasn't Don Amici, it was the other guy, I forget his name. But he said, well, I'm about to make you a very rich man. And the old guy says, I'm rich enough. That's where you need to be. You need to be at a point where money is not as important as time. Time doing whatever you want. Time spending with your family, time spending with your significant other, time in your garden, time playing with your goldfish, whatever. Whatever. So time is my highest commodity. So I don't want to sit in front of the computer, and a market order, hold on, it's on this side. Market order will get filled instantaneously. So why do I do a market order? Well, the market order and the stock order and the option order are tied together. Option order, stock order, tied together. I know what my profit's going to be before I do it. So anytime you hear me say, I want a simple, safe, predictable 1% a week. Predictable basically means I want to know what I'm getting before I get into it. That's all that means. Here is the order right here. Let me read it to you. Buy one covered call on Verizon, VZ, 100s. That is the weeklies, which means it expires on Friday, weekly. All right. 24 January 25. Well, that's this coming Friday. So if I buy the stock tomorrow morning, I sell somebody the option 24 January 25, that means they have the right to buy it from me at $39 anytime between tomorrow morning when they pay for the option, which means I collect that money instantaneously, it goes right into my account, and Friday afternoon's expiration. So they can do whatever. See, if this thing shoots up to 40, 50, 60 bucks, they have the right to buy it from me at 39. Now, a lot of you out there say, wait a second, if it goes up, you're missing out on that opportunity. Well, I'm not looking for capital appreciation. Okay? Huge difference. Capital appreciation, cash flow. Take your pick. Now, you could have both, but it's a little tougher. But I want cash flow. I'm not looking for capital appreciation. I don't want to buy a stock and wait for it to go higher and higher and higher. With an order like this, I know exactly what I am getting before I do the trade. So, $39 call strike on Verizon at the market to open. That's the order. Okay? Buy one covered call Verizon 100. That's the weeklies. 24 January 25. That's this coming Friday. $39 strike price against the stock at the market to open. That's the order right there. That green line. That's the order. Very next line is the break even. Well, what does the break even mean? Well, the break even basically means if the stock closes on Friday. That means end of trading. Well, what's the price at the end of trading? That's the closing price. That is $38.78 is the price I'll be paying. But if the break even is $38.11, anything over $38.11, then I'm into a profit. How much profit? Don't really know. But if it is over the 39, okay, then I make the maximum amount, which is in this particular instance, $89. Okay, so how do you figure out what the rate of return is? Well, you take the profit, $89, right there, and you divide it by what is the cost of the trade. Well, the cost of the trade, including commissions and fees on this account, which is Think or Swim through Charles Schwab. So all depends on where you have it. So the cost of the trade plus fees and commissions, $3,811.66. So let's bring up my calculator. Here we go. Clear this out of the way. And we want to $89. Okay. That's the maximum profit, $89. Well, what is it costing me for the trade? $3,811.66. Okay, so that's my investment. That's my profit. The rate of return for 1 week is, ready? Drum roll, dum 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 dum, 2.3%. Well, 2.3% is not bad for 1 week. Because remember, there's 52 weeks in a year. And if I'm getting 2.3% for this week, there's only 4 days in this week. It's Verizon. Okay, do you know who Verizon is? Do you like Verizon? Is Verizon a company you are willing to buy? Well, I can't answer that question for you. It's on my list. And as a matter of fact, I'm going to circle it, write it down, because I got a shit ton of money I got to spend tomorrow. So I am writing Verizon down for tomorrow. But that's me. That is not a suggestion. That is not a tip. That is not a hey, buy this. No. I'm just, okay. Do you calculate the dividend received and your profit percentage? or is that just cherry on top? Jamar, how did you guess that's exactly what I was going to say? Now, I'm not looking to capture the dividend, but let me tell you something about the dividend. Hold on a second. So, that's not it. Hold on. It gets better. Now, I do not suggest you do this until you get really good at it. Now, hypothetically speaking, okay, if you do this long enough, continuously, and you're consistently profitable on a weekly basis, 1% every single week, if you're good at that, then, and only then, after you know what the risks are involved, you can move to what is called a margin account. Now, let's do the same math, but use a margin account instead. Because the number I just gave you, 2.33, that's if it's an all cash account. Okay, well, an all cash account is totally different because you're not using someone else's money. Margin money is borrowed money. So if you put in 10,000, your broker will usually match it dollar for dollar. So they put in 10,000. So now you have $20,000 to trade with. But that 10,000 you're borrowing, you have to pay interest on. And right now I think the interest is anywhere between 8% and 10 or 12%, depending on what kind of relationship you have with your broker. Now, I've been doing it long enough. I have one account that's 3 to 1. 2 to 1? Yeah. One of my dollars, two of their dollars. Because I've been doing this for over 20 years. Now, you're not going to get that for at least maybe 5, 10 years, maybe, if you're lucky. Depends on how good of a trader you get. You get to be a really good trader, you can do a 4 to 1. You know, $1, they put in 4. Oh, hell yeah, why not? Yeah, anyway, so let's check out what the math looks on a margin account, okay? Because this just so happens to be a margin account. But the number I just showed you, that was if it was all cash, 3811. Okay, so margin, it's the number right here, 1869. So let's divide that out, and then you can see what it looks like. All right, so let's clear this. The profit doesn't change. One contract is one contract. In this particular contract, it's $89. Okay, now I'm dividing it by margin money. Remember, margin money, half of it is mine, and the other half is the market makers. But this is give you the rate of return on my money. Okay, so I'm going to divide that by 1,869. Team Snag and Whiskers, do you try to sell your options first thing Monday morning, or is this case Tuesday? Yeah, exactly. Now, the reason why I want to do it first thing in the morning, because of the time value. Now, we're going to get that in a second. Let's finish up with this example, and I'll explain to you about the time value in a second. 1869, 1869. Okay, so on margin, it's 4.7% for 1 week. So 4.7% for 1 week is over 250% per year, which means within 6 months you can double your money if you can continuously get 4% every single week. Not easy, but every once in a while it does happen. Now, when I say I average 1% every week, well, sometimes on a trade like this, which I am going to do, no, it is not a tip, it's not a suggestion, it's not a recommendation, it's nothing like that. It's just me telling you what I am going to do. I'm not giving any tips to anyone. I'm just telling you, hey, this is what I'm going to do tomorrow morning. Okay, so anyway, 4.7. I like that. I can do that consistently, but that's me. All right, so let's get out of all this and get back to something else. So let's get this out of there. Get this out of there, and change this back to that, and change this back to that. Now we're ready to look at something else. All right. That being said, somebody asked me a question about, damn it, don't get old. It's no fun, because I knew it 2 seconds ago. Now I don't know it. So now I have to go back in, see what the question was, and go from there. All right. Oh, time value. That was the question. Now, the question was from YouTube, do I sell my options on first thing Monday morning? Well, of course I do, because you're going to remember what is involved in the valuation of an option. Well, I'm going to just give you the basics. but there's a lot of crap involved in the pricing of options. If for those of you that really want to know the details, it's called Black-Scholes pricing method on standardized options. It is a huge mathematical equation. Simply put, time and price. Two things you got to take into consideration. What's the stock price? Stock price is what it is. Okay? Time. How much time between when you buy the option and when the option expires. Okay? So on a weekly option, doing it every single week, the maximum amount of time I'm going to get is first thing Monday morning, 9:31 a.m. and Friday afternoon, 3:59 p.m. Because at 4 o'clock p.m. on Friday, nothing else you can do. Now options expire on Saturday, but you can't trade after 3:59. So the maximum amount of time, Monday morning, Friday afternoon. That's it. So 1 week at a time. 1 week at a time. Week after week after week after week. Every single week. If you like Verizon, there's nothing, absolutely nothing wrong writing a covered call. See, it says 24 January, that's this Friday. 31 January, that's next Friday. 7 February, that's 3 Fridays away. 14 February, 4 Fridays away. 21 February, 5 Fridays away. And on and on and on and on. 52 times a year. Now, if you don't have 5-10 minutes a day or even 15 minutes a day to take care of your personal finances, let me see if I can equate it to you this way. Okay? 10 minutes a day, 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. That's it, 5 days. 10 minutes a day. That comes to about an hour a day. Now, picking a stock, easy. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, Carl Icahn's list, a few others. Okay, certain traders, I will watch what they're trading, and if they're better than me, yeah, I will trade some of the same stuff, if they make sense. Because it's always, always, always about the numbers. If the numbers work, great. If I heard of the stocks, even better. Now, you'll notice on the stocks I buy, Macy's, Nordstrom's, Kohl's, IBM, AT&T, Ford, General Motors, Foot Locker, Home Depot, Lowe's, Colgate, Palmolive, Procter & Gamble. You've heard of almost every single company I personally buy. Why? Because they have stood the test of time. Most companies I invest in have seen World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash of 29, the market crash in 87, the market crash in 2000, the market crash in 2008, the market crash in 2021. Okay? These companies have seen all this crap, all this turmoil in the U.S. economy. Yet, they continuously increase their profits, which means they increase their dividends to their shareholders. And a dividend is the profits that the company passes along to their investors. So if they're continuously profitable for more than 2 decades, that's 20 years, those are the only ones I like. And there's about 300 of them. Okay? Now, if you like to venture off down a road of different, okay, there's 9,835. We checked last week. So it might be a different number this week, but last week, 9,835 different companies that you can invest in at any time. So why is it I only like the 300? Because they're consistently profitable and they have weekly options. I only have 2 criteria. That's it. 2. You would think after 20 years of trading, I would have more criteria. But no, just 2. 20 years of consistent increased profits, which means increased dividends. Okay? Second, weekly options. I cannot get weekly cash flow on anything other than weekly options or sitting in front of my computer all day. Sorry, I ain't doing that. Weekly options, that's it. Consistently profitable, weekly option. 2 criteria, and it's about 300 companies that fit. All right, so Jamar, did you stay away from earnings week on stocks? Sometimes yes, sometimes no. Certain stocks react crazily, like Target, infamously crazy with their mood swings. Okay, you get a good report, sometimes it goes down, sometimes it goes up. It's not always predictable. Sometimes it's profitable, sometimes it's not. So I don't really pay much attention to earnings reports, but I do pay attention to dividends. And the reason why, I haven't showed this a while, so let's take a look at it right now. Market Watch. Here you go. Now we all know what this is. This is a calendar. Okay? In this particular calendar, you will see little green dots. Now, this just so happens to be Warren Buffett's stock list for January 2025. What do we got? Mendeley's, US Bank, MasterCard, Verizon. Okay, they already paid the dividend on the 10th. American Express, Bristol Myers Squibb. What is this one? Procter & Gamble, Moody's, AbbVie, Globe Life, Bank Mellon. Okay, you probably heard of a lot of those. Now, it's Warren Buffett's list. So if it's on his list, yeah, I will trade it. But this is just for the month of January. Okay, month of February. In the month of March, well, there's more different stocks. Now, because each one of these companies pays a dividend every 90 days. So why do I use this? Well, here's the reason. Because you see where the dividend is right here? This is Procter & Gamble. Okay, we all know who Procter & Gamble is. They've been around since the 1800s. Okay, they have seen a lot of crap. And they have increased their dividends to their shareholders for more than 5 decades. You thought I was going to say years, didn't you? No, 5 decades. That's 50 years. Okay, now I'm not talking, up, down, up, down. No. I'm talking 1, 2, 5, 7, 9, 13, 15, 18, 21. Higher and higher and higher. Okay? Consistently profitable means every single year they made more than they did the previous year. Okay, why would you not invest in a company like that? Simple game. Simple. All right, let's see this. What do we have? Did Elon Musk telling that they send Doge on moon, but why Doge down then? Okay. See, when you're talking about Elon Musk, there's 2 things you got to remember. Let's go back to where we were. Amen. Da, 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 da. Richard Gere. Yep, that was who said that in the movie. Da, 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 da. Okay, so Orpi Ahmed. Okay, so Elon Musk telling that they send Doge on the moon, but why Doge down then? Oh, you're talking about a cryptocurrency. No, I don't do crypto. Terribly sorry. What stock are you talking about? Well, we were just talking about Verizon, VZ. Saying so much and so little at the same time. Happenings now. See, happenings now, I love to get you on a conversation. You think I speak so little and so much at the same time? Well, some people are just a little bit slower. Okay, is that Think or Swim? Yes, it is. Bitcoin, next move in 2 hours. Yep, good for that one. I don't do cryptocurrency. Please, Richard Gere, yep. Why are all his posts have comments disabled? I have no idea, Matthew. I hear you're lost to many to cancer, life is short. I mean, I have no idea what that means. Benefit subscription, blah, blah, amen, blah, 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 blah. What are we doing? Da, da, dum, dum. No, I hate Verizon as a customer. Well, good vibes to you. I can't really help you with the customer side of Verizon. Okay, that's not what I'm talking about here. I'm talking about the stock side. Okay, are they moving up continuously? Well, let's take a look at the chart. Let's back to these glasses again, damn it. Okay, here's the chart for the year for Verizon. What about Siri? Okay, Sweet Jones, we'll take a look at Siri in a bit, all right? Okay, I wrote it down. We'll take a gander at it. So here's Verizon. Well, I don't know what you don't like about it, but look at what she's doing. Just basically going sideways all year right up until August. Actually, up until September. Then September, she breaks out and makes the high of the year. Okay, fine. But from there, she drops down, shoots back up, drops down again. Look at, here's your high of the year right there. Here's your bottom right there. So what usually happens after a bottom? Well, the stock usually goes up. Well, look at what it did all year. Basically went sideways. But look at the movement. Look at the actual movement. You ready? Okay. Up, down, up, down, up, down, up, down, up, down. I can do this all day long because that's all stocks do. They go up, they go down. If you don't like Verizon because of the customer end of it, well, fine. Don't be a customer of Verizon, but be a buyer because look, here's the high and the bottom's right here. And what happens? Usually bounces up on a bottom. And this is not the bottom of a 30-day. Well, it is, but this is the bottom for the year. So it's a bottom for the 30-day time period. It's a bottom for the 90-day time period. It's a bottom for the year. So the bottom is here. You make most of your money buying low, selling high. But the number one question always, 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 does it make sense? That's number one. Number two, do I like Verizon? Well, you like it, you don't. You don't like it? Fine. Next. Let's go to the next one. Okay, so let's take a look at this. Caldwell Cutie. Hello. Yeah, you're welcome, Emin. Way to go. Pitch a stock. I can't pitch you a stock. I have no idea who you are. Who said that one? User 4575134887716. Why couldn't your parents just name you Peter or Ted, Fred, Oscar, Ralph? Why do they give you a number? Okay, so I can't really tell you a stock because I don't know who you are. If I don't know who you are, I don't know what you're looking for. I don't know anything. Still investing Verizon, giving the Trump admin FCC leanings. Okay, T, I have no idea what you're talking about that. Okay, so if you have something, if you know something about Verizon having to do with the administration FCC leanings, I'm sure we'd all love to hear it. Jacob, could you touch on how you determine the right strike price? Okay, Jacob, you're going to feel silly when I tell you this, but give me 1 second. Jamar, what if at 9:30 a.m. the contract you want to buy was repriced and not giving you 2% anymore? Do you just move on? Okay, two things, Jamar. Okay, now most newbies, most people just getting ready to get started are going to lose most of their money by hitting the wrong button. Why am I saying that? Well, what he just wrote. He just wrote, what if at 9:31 the contract you want to buy, well, I don't want to buy a contract, I want to sell a contract. Now, the reason why I don't want to buy is because 80% of all option contracts expire worthless. So I don't want to be a buyer, I want to be a seller. I want to buy the stock, sell the option. So when you're asking a question such as that, the reason why I do a covered call at the market is because the option and the stock are tied together. I already know what my profit is going to be. Okay, so I already know, it's already set. Now, if it was different, if I already own the stock and I want to sell a covered call against it, that is when I would use a limit order, because that's telling the market maker, this is what I want, no less. Okay, when I'm first buying, because you're buying the stock and the option, and you're selling the option together as one. Okay, the profit is already added in, so that's my order. It gets filled. So you're selling and you're buying at the exact same time. So it's already together. So Jacob wants to know, how do I figure out the strike price? Well, let's go back. Jacob, you're going to feel a little silly when I show you this. Okay? How do I figure out the strike price? Well, the stock price right now, right here, see it? $38.90. Uh-oh, question. Invest right, I'm doing fine, how you doing? $38.90. Okay? The strike prices are right here. You just look at them. Okay? That's the current price. The strike prices. 38, 38.50, 39, 39.50, 40, so on and so forth. So what strike price is closest to 38.90? Okay, Jacob, do you see how kind of silly that is? $38.90. The strike prices are here. The closest strike price to $38.90 is 39. It's the closest one. Okay? Now you could do the 38.50, but you're only gaining an extra 7 cents. Is that extra 7 cents going to actually make that much of a difference? No. But there's another thing here. If you do the 38.50, okay, you're getting an extra 7 cents, but you're losing 40 cents. So you got to subtract 40 cents out of this. And then it's no longer worth the effort. So you're better off with the 39. It's always a numbers game. What am I buying? What is the closest strike price? What kind of a premium is it? Is it more than 1%? Well, currently, 38.90, 39, and it's going for 70 cents. Okay? Okay? The number, it's only a numbers game. Wildcat Sam, what's happening? All right. Robinhood starting margin rate is 5.75. Well, yeah, I have a margin with Robinhood. I also have a margin with Thinkorswim. Thinkorswim's margin is a little bit more money. I should say a lot bit more money. But when the grand scheme of things, if I'm paying 8% and making 50%, I really don't mind. Why do you select -1 when deciding the amount of contracts instead of +1? Leo. Leo, hold on a second. It's not -1, it's selling 1. Okay, so let's go back to that and I'll show you again. Right there. Oops, no, that's not what I want. Right here, and then right there. Okay. All right. FBJ final. Okay, John, no politics, please, but I'm going to give you one. I'm not going to let everyone else see. You ready? Anyway, Leo. Okay, so Leo asked, why -1? It's not -1. Selling 1. See? Sell 1. If I'm buying 1, it would change. See? That would be buying 1 option, selling 100 shares. No, I don't want to do that because that's going the wrong way. Happy New President's Day. Yeah. All right, so yeah, let's get out of that one. So it's the terminology. You got to understand sometimes the terminology is going to mess you up. Way to go, John. All right, so let's keep on going. You heard about the S&P 6900. Oh my goodness, somebody else likes the S&P. Funny thing is, I had a meeting with someone this afternoon. We're talking about the S&P. She said, no way, that can't be right. Well, let's take a look at the S&P, and I'll show you why I don't like the S&P. All right, so we're going to go to here. We're going to go over to here, and we're going to put SPY. Right there. And here we go. The spiders. S&P 500 ETF Trust, SPY. Okay, so what are we looking for here? Well, when I talked to someone earlier, I said, did you honestly take a look at the numbers? EOG, Sweet Jones. We'll take a gander at it. Hold up. So, did you honestly take a look at the numbers? Well, we want to look at the dividends for the S&P because they pay dividends every 90 days. Well, let's take a look at the numbers. Let's go all the way back to 2002. Okay, now pay attention closely. When I say I want companies that are consistently profitable, that means every single dividend should be higher and higher and higher and higher and higher. So let's take a look at the SPY, or the spiders, or the Standard & Poor's, S&P. All right, so let's take a gander. You ready? 35, 38, 44. Awesome. 35. Wait. 35, 38, 44, 35. That's going backwards. Does that answer your question? Okay. 35, 38, 44. Higher, lower. No, that's not consistently profitable. Something went wrong there. Okay. 36, 40, 52, 40. Wait. Again? Okay, that's once. This is twice. 41, 47, 30. What? 35? That's 3 times in less than 2 years. 3 years, sorry, 3 years. 3 times it went down rather than up. So how can you tell me the S&P is a good place to put your money? But wait, it gets worse. Believe it or not, it does. Hold on. 40, 41, 47, 35, backwards again. Where is it? 35. 57, 47, backwards again. 49, 52, 67, 52, backwards again. 56, 58, 79, 55, backwards again. See, it goes up, it goes down, it goes up, it goes down. No consistency whatsoever. None. Sometimes you have to speak to people like they're in kindergarten. Yeah, John, I get that. And there's some people here that get aggravated when I do that because they are. Anyway, let's keep on going. But I'm glad you understand that, John. What company was that again, please? That was Verizon, VZ. What we just looked at just now, that was the S&P, the spiders, SPY. Okay, Jacob, Gen Z, Jacob, Verizon, we already looked at that one. Hi, how can I learn to do this? Okay, 1, 2, 3, Honeybee Me. Hey, that's a cool name. My best advice to you, keep coming back. I'm here every single night, 9 p.m. Eastern Standard Time, and I'm here until 11:30. Ask whatever questions you think you need in order to get you from where you are now to where you want to get. John, but I appreciate it when you do that because you simplify the information for people that need to know. Thank you, John. Okay, looking for a BMW M340. Have you any in stock? What would make you think I would have a BMW? Okay, there's a BMW convertible outside, but that's besides the point. Okay, Big Brain, ENB, having a year. Okay. Do you think Meta can be shorted? Okay, so 1, 2, 3, Honeybee Me. I don't do Meta. Now, when I said earlier, I didn't know if you caught it, I only invest in companies that have consistently increased the profits that they give back to their investors. I'm 60 years old, I am retired. I have to live on income on a weekly basis. Okay? Means every week I bring in 1%. Oh, that's right, I didn't finish that example, did I? 1% a week. Okay, so here you go. 5 or 10 minutes a day. 5 or 10 minutes a day. So 10 minutes a day, 5 days a week, that's 50 minutes. Prasnath, I got whatever name that is. Hi, how you doing? 50 minutes a week. Let's call it an hour. An hour a week. 1 hour a week to gain 1% of whatever your portfolio is. Now, if you have $5,000, maybe 1 hour is not worth, because $5,000 is only going to give you what, $50? That's $50 for 1 hour. It's still not that bad. But here's the thing, as you get older, some of you are older, some of you are getting close to retirement age, where you have 50,000, 100,000, 200,000, 500,000. I got some clients that have millions. 1% a week, let's say 100,000. 1% a week of 100,000 is $1,000. And if I'm doing this 10 minutes a day, because basically you always hear it, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for that safe, predictable, consistent 1% per week. So 10 minutes a day, 1%. $1,000 for 1 hour of my time. Now, some of you have seen some of the accounts that I have. One of them has 160, one has 190, one has 130. So an hour a day, sorry, an hour a week comes to 1%. 1% of 100,000 is $1,000. So you got $1 million, one hour of data, that's $10,000. Figure it out that way. If you only got 20,000, well, 1% of 20,000 is 200. No, it's, wait a minute, 20,000, yeah, it's 200. $200 for 1 hour. But as your count grows higher and higher and higher, your rate of return for your time gets higher and higher and higher. Okay, so think of it that way. Okay, Big Brain wants to take a look at ENB. Now, Enbridge, I don't even think that's on my list. Okay, so 1, 2, 3, Honeybee. Meta I don't do, because Meta has only dividend twice. Twice, which means they have 19 years and 6 months to go before it actually makes my list. The great ones use repetition. Thank you, James. Sweet Jones. Way to go. All right. Big Brain, 6.5% dividend. I have no idea what you're talking about. I'm assuming you're talking about that stock you like. Soulmates. Yeah, thank you. My birthday was yesterday. So, yeah, I'm a little older. Wait a minute. Today's Monday. See, this is what happens when you get old and you retire. You forget what day it is. So, today's Monday. Yesterday was Sunday. Yeah, my birthday was yesterday. Okay, so, yeah, thank you. So, Big Brain, you're talking about ENB. So, we're going to take a look at ENB in a little bit. But let's go back. I want to catch all these questions. Okay, SPX Coder. Weekly options. Never heard about that. Thanks for that. Okay, welcome. PA, Plains All American, is a cheaper one, but giving 6.5. Okay, Plains All American. I did that one once or twice. PAA. We'll take a look at it. Hold tight. Calvin Hill's in the house. Top 5 stocks for 2025. Well, you do realize we're only in week number 4. Is that right? Week number 4? I think so. It doesn't want to open up. Yeah, we're in week number 4. Happy 61. Thanks, John. How many contracts do you usually trade, and what delta are you using? Oh my goodness, you're one of those, Ram, huh? Ram's Vita. How many contracts do I usually do? Well, it's usually between 5 and 120. It depends on the stock price. Delta, I don't pay attention to that. Because if you hang out for a little bit longer and watch as it progresses forward, Delta has nothing to do with it whatsoever, any way, shape, or form. Okay? If it's a good company and if the domino's falling in the right direction, why not? How do we look at it that way? What site are you using? Okay, so this site right here, this is Yahoo Finance. Let's go back to the let's go back to Thinkorswim. Go back to single. All right, so let's keep on going. Don't. Oh, all right. Oh, I have some questions down here. Face blue. Okay. Michael, people, if James to see your comments, you have to go to the other YouTube video, the one that shows him with screen behind him. He doesn't read the chats in this chart room. Look up Siri. Okay, so Michael, Tuxum, we actually added a new screen. So the new screen, okay, along with the software, remember I told you I got 6 cameras going until I can figure out how to use the software? Well, I got the software to a point where I'm running 3 screens, which allows you guys to see this, allows me to see the comments down here from the other YouTube channels, and allows me to see other stuff right over there. So I got 1 screen here, 1 screen here, 1 screen down here, and 6 cameras up there. So I'm trying to get to each and every question. So I will, before the night is over, answer each and every single question. PCG, Alberto, what the heck is PCG? Now, Alberto, PCG. Oh, look at that. It is a weekly optional stock. What is it called? P&G. Ow, P&G. Yeah, oh, hold on a second. Michael, my mistake, thanks. Well, actually, Michael, it's not really your mistake. You were right. It was just that the screen was added this weekend. So you wouldn't have known. So P&G So let's find out, because I've never traded P&G. Okay, first thing I want to do is find out how often have they increased their dividends. I'm going to say no. Okay, and here's the reason why I'm going to say no. Ready? Follow along with the numbers with me and tell me what you think. Now, remember, I said there's 9,834 different companies. I like companies that are consistently profitable. That means each and every one of these dividends should be higher and higher and higher and higher. So let's take a look. 2005, 30 cents. 30 cents, 33. Wait a second. 2005, it was 33. 2006, it was 33. Okay, 2007, 36, 39, 42, 46. Wait a second. 46 in 2010. 46 in 2011. 46 in 2012. 46 in 2013. Do you see a big error here? Okay, this is not increasing profitability. It's being stagnant. Why would you invest in a company that's not consistently profitable? It boggles my mind when people do this. Okay, that's 4 years. 2014, 46. That's 4 years. That's 5 years. 2015, 46. That's 6 years. 2016, it finally jumps up to 49. Okay, so 5 years at 46. Well, that's no, because it's not increasing their profitability. I want consistent profitability, which means year after year after year, higher and higher, higher and higher dividend. Well, I'm not used to talking so much, so I got to apologize to you guys. The ginger tea with honey actually helps. Woo. Ginger tea. Ooh. Anyway. All right, so 2016 is at 49. 53. Oh, hell no. Look at this. Nothing in 2018, 2019, 2020, 2021, 2022. 2023 drops to 1 cent. Oh, hell no. Terribly sorry. I really don't care how much you like PCG. No. For me. If you like it, you want to do it, fine. You do it. But if it's not consistently profitable, why would you put your hard-earned money in there? Because there are companies. There are companies consistently higher year after year after year after year. They're having a difficult time. Well, I'm sorry you're having a difficult time, but not with my money. Okay? You figure out what's right for you guys. For me, hell no. All right, next. Let's go to the next one. What do we got? I don't do meme coins. Sorry, Gage. How did you add the dividend marker on your chart? I'm looking for it. The dividend marker. Oh, on that chart. If you have Thinkorswim, it's already on there. Okay, let's go right there. Get over to that side. Bring up the chart. There it is right there. Okay. Look at this. PGE. Are you seriously? Look at this. 1 cent. 1 cent. 1 cent. 2.5 cents. Yeah, no thanks. After 20 years of being in business, hell no. Sorry. Big Fish. Pfizer, can you show me some analysis? Big Fish, sure. Hold on. Botox docs. It's all about the numbers. Well, yeah, it is. It's all about the numbers. All right, so what are we looking for? Okay, Big Fish wants to look at Pfizer. However, Big Fish, I had a couple of people come in before you, so I'm going to look at this first. But I will put Pfizer down, PF. We'll take a look at STX, because that was up first. Okay, so STX. STX. Seagate. All right, let's get out of there. I don't want that. I want that. There we go. First and foremost, always, 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 I'm looking for five things on the chart. High, low, where was it, where is it, and what's the direction? Up, down, up, down, up, down, up. Well, look at this right here. That is a big jump from the 85 to the 97. Well, let's take a close look, because that just might be a big fat no. The 20th, right there is the 20th. All right, here's the last 30 days. No, sorry. 30 days ago, we're at 87. Now we're at 97. That's a $10 increase. That's over 11% increase. It might even be 12%, but it's pretty close. 30 days ago, here's your 30-day bottom right here at 85. Now it's at 97. That's a $12 increase on an $87 stock. Yeah, there's going to be profit taken here. There will be eventually, because you don't go up 12% without somebody like me saying, oh, 12%, yeah, I'm going to take my profits. Because you take your profits and you move over to the next company. Because there is going to be another company doing the exact same thing tomorrow. And there'll be another company doing the exact same thing Wednesday. And there'll be another company doing the exact same thing Thursday. There's over 9,800 different companies available. Why are you dead set on one that already did it? Okay, so what are you waiting for now? Well, you're waiting for it to turn around, take the profits, drop back down again, find the bottom, consolidate, and turn around, go back up again. It's only a couple of weeks away. Okay, so write it down. Write Seagate down for 2 weeks. You like that? 2 weeks. No, 2 weeks. Write it down for 2 weeks. Say, come back, take a look at it again. How far down did it come? So I'm going to write Seagate down for 2 weeks. Oh, wow. It's almost time to get a new pad of paper. This one's getting full. January, February, March, February. Seagate, SGX. All right, first one on the list for February. All righty, so Seagate's a no. Next on the list, somebody wanted to take a look at Siri. All right, Siri, why not? S-I-R-I, Siri. Here we go. Ooh, I like that. Now, what is it that I like about it? Well, look at it. If you take a, now don't just give it a quick glance and say, oh, it's dropping. No. Now, see, I trade, I jump in on Monday, I'm out on Friday. Do I care about this? No. What I care about is this right here. What's happening now? See, it's 55 down to 22, that's a 50% drop. 50% drop. Yeah, there are going to be people looking for bargains. Well, let's take a look at the numbers. Now, I like the chart, but before I go further, let's see, is it going to be worth my while to jump in? Remember, I'm just looking for that 1%. So 1%, here we go. The current price is $22.39. So the closest strike price would be $22.50. So the $22.50 is going for 22 to 39. So that's just right around 1%. And I like 1%. Sweet Jones, what is your percentage into each company you buy? It's usually 20%. Okay, so if I have 100,000, 20,000. 20,000, 20,000, 20,000, 20,000. I like to go 5 to 6 positions a week. That's it, per account. Okay, now let's continue. All right, so I like the numbers. I like the chart. Now, the chart looks okay, the 1 year chart. The numbers look okay, great. Now what is it going to tell me when I zoom in and take it from 1 year, go to 90 days, go to 30 days, and then look at seasonality. We're gonna get into that one also. So let's take a look. A year ago was the high of the year, 55.49. But then she drops. Look at the last 90 days. Now, the 90-day chart, I'm looking for the same 5 things. The high, the low, where was it, where is it, and what direction is it going? Look, down, up, down, up, down, up. I love this right here. Your bottom is right there, okay? So, buying a stock, you're going to make most of your money buying low and selling high. Well, here's the bottom right there, and that's the bottom of the year. That's not the bottom of the 90-day period. Well, it is bottom of the 90-day period, but it's the bottom of the year. You guys should be excited about that. It's the bottom of the year. That's where you make most of the money. Buy low, sell high. Okay, Angela 1 skipped over my question. I did. I don't skip over questions. I read each and every single question. That's why it takes me so long to do this. Angela, oh, I have an E-Trade account. Do I need a separate account like Think or Swim to analyze stock swing trading, or E-Trade sufficient for this purpose? Ooh, see, I did E-Trading. I did. See, 15 years ago, I wanted to find out what is the best trading platform. So I looked at about 20 different trading platforms, and I wrote a book. 15 years ago on choosing the right trading platform. I've been using this one for 20 years. Now, the nice thing about this one, it got swapped around a lot. Now, the guy who created this was a professional trader. Okay, he sold it to TD Ameritrade. TD Ameritrade got bought out by Charles Schwab. So old Chucky Boy owns this now. So you can still download this for free, use it for a while, but you do have to call them and say, hey, I would like to use your software. What do you think? You know, they will allow you to use it for a while, but eventually they would like you to move the money there. Now, for me, it is so much easier because I know exactly what I'm looking for. Okay, I like certain stocks. I like looking at certain charts. And the nice thing about this one, I can see everything on the same screen. Now, I do have a few other accounts that with Robinhood or something like that, I have to go from one screen to the next, to the next, to the next. And when you're getting old, you got to write shit down. Do I want to write shit down? No. I want to do this because everything is right there. And I don't have to move around. All right. Anyway, let's keep continuing. We're looking at Siri and we're looking at the 2250s. So let's see what the 30-day chart looks like. Okay. Now the 30-day chart, we're going back to the 20th right there. Here's your last 30 days. Now your last 30 days is a huge difference from the 1-year chart to the 90-day chart. Well, now the 30-day chart, why do I want the 30-day chart? Well, because the 30-day chart gives me an idea what happened last week, what happened the week before. It gives me an idea what's going to happen next. You can tell by looking at it. You should be able to tell by looking at it where it should be going next. Okay? Should. Doesn't mean you do. All right. 30 days ago, we were here. We opened up right around 2150. Shoots up to 2375. Drops down, back up, back down. Here's the 30-day bottom. Last Monday. Tuesday, Wednesday, Thursday, Friday. 4 days to the upside. So look at it. Up, down, up, down, up. Where do you think it's going next? Well, it's going to continue going up because the 30-day high is way up here. Could it hit it? Yeah, it could. Is it going to? We don't know. And that's an honest answer. We don't know. But it looks as if it's going up. And it has all this space to go, to fill in before it challenges the 30-day high for a new 30-day high. Because it can only be one 30-day high. Okay? Now, what I haven't shown you before, what we're going to look at next, is called the seasonality chart. Now, the seasonality chart, that gives us an idea of how often does the stock make this particular move. Well, what we're looking at here, all the way to the left, is January 1st. All the way to the right is December 31st. This is 1-year chart. It's not the stock prices, it's percentages. Because it shows you how has the stock moved over the last 10 years, predictably. So they take 2015, 2016, 2017, 2018, 19, 20, so on and so forth. 10 years of data all stacked on top of each other to give us an idea of what is the average movement this time. Well, look at here. Here's January right here. I want to be out of this thing before the end of January. Look at the end of January, all the way until March. Yeah, no thank you. But look here. That looks good. Can I make a quick trade? Because we have 2 weeks left to go until January ends. So it makes sense to me. Jump in, jump out. Get that quick 1 or 2% and be done and gone. Okay, so let's get a little closer. Right there. So this is the month of January. See, we're right here. Beginning of January, end of January. This is the average movement. Basically a little to the sideways, and right around the end of this coming Friday, she jumps up a little bit more and pulls back a little bit. So yeah, I would love to jump into Siri, get in this week, get out either this week or next week. But I definitely want to be out before February comes. So if you're placing your strike prices, keep that in mind. Go up one strike price for a safer trade. Less money, but safe. So you have to decide, do you want safety or do you want profitability? Me, safety is key for me. You guys got to figure out what's right for you. All right, so let's get out of that. back into the regular chart. There we go. Swing it back over to here. Okay, so yeah, I like Siri. All the numbers work. And I'm going to write that one down also. All right, next on the list, we have EOG. Why do we have EOG? What is EOG? EOG. Okay, this is going to be a no. He wasn't that quick? No. Because what I'm looking at, let's see if I can do this again. Hold on. I want to show it to you guys and tell you why it was a quick no. All right? Remember, I'm looking at 5 different things anytime I look at a chart. And I always want to look at the 1-year chart first. Because the 1-year chart gives me an idea of what is the stock doing this year. What has it done? So, 5 things. Are you ready? The high. Hold on, I got a question right there. Selena, how are you doing? The high, right there. The low, right there. Where was it? A year ago? Right there. Where is it now? Right there. Well, look at where it is now. Hey, look at this. It went from 117 up to 137. Yeah, no thank you. Take one look. It doesn't take that long. Look, here to here. Yeah, no. When's the last time you heard somebody says, ooh, this stock is at a high. Let's buy it and wait for it to go higher. Yeah, no, sorry. Not for me. Don't get me wrong. Like the company, it's on my list, but it's not the right time to buy. So if you zoom in and take a look at the last 30 days, right about there, okay, look at that. Yeah, it's going to be profit taking. Would you short it? See, Eric, I could say yes, because if you think about it, Eric, take a look. 117, 30 days ago. 137. Well, what is that? That's a $20 move, right? Well, a $20 move on a 118 stock, that's a little bit less than 20%. 20% increase, what do you think is going to happen? Profit taking. But how much? That's an interesting question. Buy low, sell high, create a limit order. Selena, way to go. All right, so how did you, okay, we looked at that one. Pfizer, we got Pfizer on the list. All about the numbers. Inspire me more. Dude, I haven't seen you in a while. Glad you're around. World you want to live in, girl. How are you today? Abbott Labs, ANF, and Dollar General. Now, ANF, I'm not 100% sure of, but Abbott Labs, and what was that last one? Dollar General. Okay, see what I can do. All right, let's keep on moving. Keep on keeping on. Okay, what do we have down here? Okay, Michael. If James sees you come, okay, Siri, okay. Jose, why don't you create an alert for the stocks instead of write it down? Oh, that's so adorable there, Jose. Okay, Jose, let me put it to you this way. I'm a Gen Xer, okay? We believe differently than everybody else. We do. We do things differently, okay? If I trusted computers, yeah, I would do an alert. But I don't trust computers. Okay, many a times have I touched a button and everything disappeared. Terribly sorry, it happens. I write stuff down. I'm old school. I actually tell people, if you want to call and talk to me, send me your phone number. I will give you a call. Now, there's a lot of people here tonight. Okay, so here you go. There are a bunch of scammers out there telling you it is me and I am talking to you. Nope. I don't do Instagram. I don't do, wait. I don't do Telegram. I don't do, what's that other one? WhatsApp. I don't do that one. I don't do cryptocurrency. I don't do Forex. I don't do fast contracts, quick contracts. I forget that was it. I don't do futures. I do dividend stocks only. If you really, honestly, if you really want to talk to me, DM me with your phone number. I will personally give you a call. I say that every time. Now, here's the thing. Anywhere between 5 and 25,000 people will come through and watch me, doing this kind of stuff. And I say the same thing. You want to talk to me? Send me a number. I will give you a call. Okay? 2, maybe. 2 a day, sometimes 3 a day. People actually give me the number and I'll call them. said, wow, I didn't think you were going to call. Yeah, you want to talk to me? Send me a number. I don't do texts. I don't do any of that stuff. Okay, and I definitely don't take money from people unless you're standing in front of me, eyeball to eyeball, shaking each other's hand. No, I don't do this crap online. So if you get an email, a text, or something, somebody asking you for money, and I have a great tip for you, yeah, no, that ain't me. Okay, you want to talk to me? Send me a number. I will give you a call. Let's get back down to business. Hold on. So, Jose, to answer your question, why don't I set an alert? Because I've seen enough Terminator movies not to trust computers. I don't use AI either. I've seen enough Terminator movies where I don't trust computers. All right, let's keep on going. Caldwell Cutie, hey, I keep getting kicked off. I don't know why. Wildcat Sam, I was in Macy's store today. Cool beans. I actually have some Macy's. But we'll take a look at Macy's. Ooh, D-Wiz, Altria, M-O. I bought Johnson & Johnson last week. Double J, I have no idea why. No, actually I do. You know, Johnson & Johnson's been around for over 100 years. Okay, great. They have great consistency with their profitability, but their premiums are less than desirable for my liking. Delta Airlines, let me guess, a 5,000 course, huh? Oh, so I'm assuming, you're making the assumption I'm trying to sell somebody something. Okay, here's the funny thing about between me and everybody else. Okay, I have stuff to sell, yeah, but I'm not trying to sell anything. If you want to buy stuff, you know how to do it. In the bio, there's stuff to buy. Fine, you go buy it. I'm not going to try to sell anyone anything. You're not going to hear a pitch from me because I don't do that. I don't do pitches and I don't try to sell anything. If you're serious and you want to buy something, fine. In the bio, this stuff. You figure it out. Matt King, I want out of Johnson & Johnson, but I'm a little in the red. Uh-oh. Not worth it. Just hold on and grab the dividend. Okay, well, Matt, I wrote Johnson & Johnson down. We'll take a look at it. I don't think I've ever bought Johnson & Johnson. Don't get me wrong. They're a great company. They are consistently profitable, okay? But the premiums on their covered calls, I've never bought one because the numbers just don't work. D-Wiz, show everyone MO, that's all they need. No, definitely not. Thinking about ExxonMobil. Oh, I am ski. Okay, Exxon. We'll take a look at ExxonMobil. Okay, sit tight. Let's keep on. N-A-K or K-O-S. Ooh, what the heck is N-O-K? Hold on. I can't write all this stuff down. N-A-K K-O-S. Now, here's the thing. STW108, I haven't heard of either one of those. And that's not a good thing. So if I do N-A-K or K-O-S, I've never done them before. So usually that means they're going to be a no. All right, God's Goodness Podcast. Do you have a book you recommend to get started in all this? I've written 14 books. They're available somewhere online. I honestly don't know. Book number 14, I finished it last February, but I haven't even uploaded it online yet. But the book that I liked was Wall Street Money Machine by Wade Cook. It was an easy read. Scott wants to take a look at Apple. So you guys keep asking these questions, we're not going to actually get to anything. Okay, Abu Yassin. Yeah, quantum companies, no. Okay, STW 108. Now, you guys, please do me a favor. I am going to answer each and every question. Okay, I do answer each and every question, but let me get to some of these stocks so you guys can see and see if they make sense. Uh-oh, holy shit, someone did it. Someone did it. RDPSC, thoughts on SCHD. Holy crap, double hell no. When I say, I got 5 rules, okay? Now, for you guys who do not know who I am or what I do, okay? So this skill of yours is called dividend stock, correct? No, it's dividend stock talk. Actually, it's called dividend capturing 2.0. So you guys who may have known me, who may have seen me before, who may have heard of me before, You know that I created this trading strategy specifically for my 9-year-old daughter. With all you people here, some of you haven't seen it. So let's quickly take a gander at the little princess. Where is she? Where is she? Where is she? Right here. Okay, this goes to my website. Here's all my social media. Let's go to YouTube, and let's let that load. Hold on a second. You're gonna get a kick out of this. It's funny. Videos right there. Look at this. I got a whole bunch of videos. The oldest videos, those are the ones you want to see. Right here. Here we go.
As you being part of my internet website called Thingy, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
Okay, so that's my daughter. She's 11 here. I taught her when she was 9. So hold on. Here's me. My favorite part's coming up. You guys gonna kick? I laugh every time I see this. Hold on.
That means every single day you might have something. There's a different company paying out dividends. Seriously.
I laugh every time I see that. So here's the thing. When my daughter was 9 years old in 2008, she said, "Daddy, what are you doing? Can you teach me?" 9 years old. How do you teach a 9-year-old to trade stocks? Well, here you go. It's got to be simple. It's got to be safe. It's got to be predictable, consistent, and no way to lose. That was for my daughter, 9 years old. I'm going to write Pepsi down. Hold on a second. We'll take a look at Pepsi if we get time. Now, she was 9 years old. She said, "Daddy, can you teach me how to do this?" I said, "Great, fine. Let's do this." 5 rules. Very simple. Never buy something you don't understand. If you don't understand who the stock is, what they do, what their numbers are, that means taking a look at how profitable they are, how consistently do they increase their dividends, okay? Do they have options? If you don't know what you're looking at, you don't understand the company, don't buy it. That's rule number 1. It was very simple for her. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Simple. Five list. Okay, rule number 2, never sell at a loss. It defeats the purpose of the whole game. Rule number 3, consistently profitable companies. Rule number 4, weekly options only. Now, the reason why I say that is the only way I'm going to get a weekly cash flow is through a weekly option or sitting in front of my computer all day. Hell no, I value my time way too much. I'm perfectly happy with 1% every single week. Rule number 5, make sure the numbers work. What do I mean by that? What am I buying it for? What's the closest strike price that I can sell? Is that more than 1%? Great, wonderful. What's the chart telling me? Well, the chart's telling me no here. 30 days ago it's there. Now it's here. Profit taking, no thank you. Make sure the numbers work. That's the 5 rules. 2 criteria. Consistently profitable, weekly options. That's it. Consistently profitable, weekly options. And there's only about 300 companies that are consistently profitable and have weekly options. People talking about trying to short Meta. Just curious if it could really be done. Yeah, it can be done. I have no desire to do it because Meta doesn't pay dividends. Well, actually, Meta has just started to pay dividends. Just started. Which means I'll be more than happy to look at Meta or Google in 19 years. Because at that point, it will fit into what I'm looking for. Consistent profitability. About how many companies do you invest in every week? About 5 or 6. That's it. I got like 7 accounts. I just picked up another account. So it's 7 accounts now. Out of those 7 accounts, it's usually only about, if you take a look, okay, how are you doing? Okay, if you take a look, let's go back to my website again, just for the fun of it, right here. If you take a gander, okay, these are all the trades I did last year. Every single trade, from the first week of January all the way up until the last week of December. And every single trade I made is right there. Okay, here's the timestamp over here. It tells you what kind of a trade it was. Did I buy, did I sell, how many positions, what's the stock symbol, what was the options that I sold, because I do weekly options, stock options. Okay. And then what was the price? What is my credit? And what rate of return did I get for the week? Okay, so this one right here, 5 positions. Advanced Auto Parts, Harley Davidson, Macy's, Mara, Walgreens. I made 1.6% for that week. 1.6%. It's on every single trade that I've done. This is last year. Now I haven't done this year's yet because we're still trying to tweak all these numbers. All right, anyway, let's keep on going. Good, glad you like it. New student, Wakdi Wadani, how are you today? What is a qualified dividend? Qualified dividend. What's the difference between, well, what's the other one? Qualified dividend. I have no idea what you mean by that. Hello from Alabama. Thanks for taking your time to teach us. You're welcome, Mr. Moolah. Oh, I like that name. Okay, 1, 2, 3, honeybee, new follower. I would like to build a dividend portfolio so I can retire in 3 years. Cool beans. ABR. What the heck is ABR? ABR. And somebody just mentioned something about taxes. Donald Powell. What is the tax rate on weekly option income? All right, so Donald, I'm going to tell you what I tell everybody when it comes to taxes. If you have a question about taxes, you really need to talk to a tax strategist or a tax planner, not an accountant, not a bookkeeper, not a tax preparer, a tax strategist or a tax planner. You are in your right to pay 0 income taxes if you can figure out how to do it legally. There are many ways of paying 0 income taxes if you do it legally. So, tax strategist, tax planner. Okay, so Matt King. I have Exxon since 2022, genuinely love it, and trim down to take profits, but I have to buy point in the mind if I have to grab it more. Okay, I have no idea what that means, but we'll just take a look at ExxonMobil if we get some time, because I got so many damn questions. All right. Which website app should we be using to trade? Okay, Ghost Watcher. I use Think or Swim, which is available. Okay, Think or Swim. Thank you, thank you, thank you, thank you. Okay, cool beans. Intel. Ooh, I love me some Intel. Trying to get these questions. Uh-oh, a lot of questions. Uh-oh. Okay, keep getting kicked off. Sorry about that. MO all day. Altria, I don't think so. Okay, Altria is not as good as you think it is. Okay, I don't do any cryptocurrency at all, so don't even bother asking. What book? I already did that one. People, okay, got that one, got that one, got that one. Okay. NFG. Sorry, dude, NFG is a monthly optional stock, just doesn't work. Danny wants to take a look at Intel. I'll write that one down. INTC. I love Intel. I actually have some Intel. Clorox, CLX. Lindarella, how are you today? Nice to see you back in. Pa and Mini Me. Ooh, cool. AGNC. Double hell no with AGNC. Now, AGNC used to be on my list. But now AGNC is not on my list. And here's the reason why. Okay, let's pull it up. Let's get out of here. Let's pull up AGNC, and I'll tell you why it's no longer on my list. AGNC. Now, okay. Here's why AGNC is not on my, I just missed a question, and I hate missing questions. Okay. So here's why AGNC is not on my list anymore. Now, it used to be. Okay? Here we go. The current price, $9.61. It's cheap, okay? But the $9.50, you're getting 12 cents. Okay, you're losing 11, okay, because you're buying at $9.61, selling at $9.50, you lose 11. So you're getting 1 penny. Yeah, no, thank you. But look what's underneath it. 0, 0, 0, 0, 0. So if you're off, yeah, it's just don't even bother. Now, I like Dell. Whoops. Try this one more time, right there. Dell, D-E-L-L. Okay. Look at the premiums here on Dell. Okay, at the money's right here. Okay, 155, 108, 75, 46, 44, 30. There's no zeros there. So if the stock goes down, I can sell one less value and still bring in something. So if I see a bunch of zeros, so Energy Transfer, nope. AGNC, no thanks. Oh, Vale Mountain, MTN, what the heck is that? MTN. Because I got like 20 stocks to look at, and we're past 10:30, which means we're only here for another hour. Might not be able to get to all of them. Okay, but if you guys like, comment, and share and keep the count over 200, I'll stay longer. But you know, it's at 188. You gotta like, comment, share, and maybe we can get more people here. So AGNC is gonna be a no. Tried asking TikTok 15 minutes ago. Okay, Joe rocks. I have no idea what that means. Yeah, Joe. Okay, Joe, when I say I'm going to get to every single question, I will. Okay, and I've seen the question. But here's the thing. You got a couple hundred people there all asking questions all at the exact same time. I can only go so fast. So Clorox is on the list. Natural gas, natural fuel gas, NFG, no. Happy birthday, thank you. AGNC is a no. ABR, we already have that on the list. Laurie, thank you for that. Hey, Carol, what's up? Trump is up, thank you. I tried to use a fuel calculators, but they don't seem right. Percentage profits seem off. Okay, Carol. Eddie, PCG, we already looked at that one, it's a no. So what is this called? Texas Brown Eyed Gold? Dividend Capturing 2.0. So when you have 4 different IRAs and 2 brokerage accounts, I need to make 6 identical trades. It's totally up to you, dude. There's so many different trades out there. Should I pull out the Trump coin? I bought it at 74. Can't answer that question. I have no idea. Joe rocks. There it is. MTN. You went over to YouTube to ask the question, and it's just popping up on TikTok. Because remember, there's a whole bunch of people here. Why does my aunt beat me every morning with a hairbrush? Because you probably deserve it. Ooh, Graph 125. How are you doing? I changed HTB. I changed my view. Dividends are just a forced sale of stock. Total return is all that matters. Okay. Keitha, thank you very much. How about Coca-Cola? Ooh, Tommy, KO. Okay, KO. Well, might get around to it. I don't think so. Joe rocks. Can you check out MTN? You know, Joe, ask once. LOLs. That's funny. What do you think about the Trump coin? I don't do coins. No coins at all. No coins, no coins. What are some of the companies you are consistently high? Oh, A.L. Jones. That's an easy one. Okay? Take a look at the Dividend Kings. Okay? 54 companies that have consistently increased their dividends for more than 5 decades. The Dividend Aristocrats. 67 companies have consistently increased their dividends for 25 years. Okay? Dividend Champions, 150 companies that have consistently increased their dividends for 25 or more years. The Dividend Contenders, 300 companies that have consistently increased their dividends for 10 to 24 years. And then just for the fun of it, I throw in Warren Buffett's list to round it off to about 300 different companies that I'm looking at. Bank dividend stocks, yep. There's Wells Fargo, there's Capital One Finance, there's Bank of America, Fifth Third Bank, a few other ones. How do you become a member or learn more about how you invest? Brian, send me a DM with your phone number. I'll give you a buzz. I promise people I don't try to sell anything here, so I'm not going to try to sell you anything. I'm not going to show you. But if you want to buy stuff, it's up in the bio right up in there. Right up and there. Yeah, right there somewhere. Anyway. Joe Rocks, MTM is a no. No weeklies. Thanks, James. I'm going to cross that off my list. Thanks, James. Joe Rocks. It's the 4th time I've seen that, Joe, and it's still going to be a no. What other metrics do you look at besides dividend growth? Wow, that's an interesting question, Tyler. Now, Tyler wants to know what the metrics do I look at. 2, Tyler, see if you can understand this. 2, consistency of profitability. That's Number one. Number two, weekly option. That's it. Ooh, Walmart, that's on the list. Clorox, that's on the list. Dollar General, that's on the list. Pepe, no. IBM. All right, Nick Santos. Oh, thanks, guys. Sorry, new to this. Still going to follow. Joe Rocks, don't worry about it. All right, Nick. I don't do stocks over 500 bucks. Costco's close to 900. Yeah. If I can make 1 or 2% on Macy's, which is 15 bucks, why do I want to pay $900 for that? What stock is this? Well, this is Dell. All right. Thoughts on Oxycoin? I don't do coins. What do you need to hold over this year to be strong? Okay, the real win, okay, I buy and I rotate, okay? Last year, my number one stock was Macy's, Nordstrom, Kohl's, Walgreens, and Ford. This year, I don't know yet. What do you need to hold? Okay, we got that question already. XCN. Christine, what the heck is SCN? I am Fresha. How are you today? Let me write this down. XCN. XCN. All right. I have no idea what. Sir, do I offer a course? Believe it or not, I'm tweaking it still. Plant-based runners. Killing it, man. Have you ever looked at Torn? Oil sector stock. Very high dividend, but very volatile. I've never heard of it. TORN. Now, interesting thing on stocks I've never heard of. Now, I don't want to sound pompous or high and mighty, but I've been doing this for 20 years. If there is a stock that has consistently increased its dividends for more than 2 decades and has weekly options, I already know about it. Okay, TORN, never heard of it. Okay, so just for the fun of it, TORN. Can't find that symbol. Well, that's going to be a no then, isn't it? Angelo. I've already made over 1% this week on PR. Should I sell it now or wait until Friday? It's a tiny profit since I'm still learning. I'd appreciate your insight. Okay, so PR, I have no idea what that is. Okay, what the heck is PR anyway? PR. Oh, hell no. I wouldn't do that one. But that's me. If you like it, fine. I don't do monthlies, and here's the reason why I don't do monthlies. See this? February, March, April, May, July. Those are all months of the year. That means it's a monthly optionable stock, which means you can only do it once per month. Well, once per month is only 12 times a year. Okay, less work. I get that part. Procter & Gamble. Won't write that one down. But once per month, and then I got to figure out where's the stock going to be in 30 days. I have a hard enough time trying to figure out what's going to be in 5 days. Because if I jump in on Monday and I want to be out on Friday, I want to be right. But trying to figure out, let's pull up 30 days. All right, that's 30 days right there. Here's 30 days. Okay, look. Up, down, up, down, up. Okay, that's 30 days. Great. Now tell me what it's going to be in another 30 days. Because that's what a monthly option's for. You buy the option, you buy it at 16, okay? What is the 16 going for? The 16 is going for 50 cents. Well, 16 into 50, how many times is 16 going to 50? 2 is 32, 3. 3% for 32 days. That's 5 weeks. 3%, 5 weeks. That's not 1% a week. That's 3%. So you do 3% once a month, that's 36% per year. Okay, fine, if you like that. But here's the issue I have with monthly. Okay, where's it going to be in 30 days? If I do the 16, okay, it looks This is just my opinion. It looks as if there's going to be profit taken. Because if a stock goes from 13 to 16, okay, that's only $3. But $3 on a $13 stock, that's just a little bit around, was that 22, 23%? 22%. Yeah, there's going to be profit taking, which means it's going to come down. How far down is it going to come? And then what is it going to do next? Is it going to be back up at 16 in 30 days? I don't like monthlies. The numbers just don't work. Yet, some people still want me to take a look at them. Sir, do you offer a course? Yeah, I do offer a course, but it's still being tweaked. So your best bet is just keep coming here asking questions at this moment in time. Eventually, I'll have the course done, and then you can buy it. But I'm not trying to sell anything. Jonathan, Ford. I like Ford. Please don't hate me, James. I made a typo. Oh, Procter and Gamble. Okay, see, Procter and Gamble. I love that company. Huge difference between Procter and Gamble and PR. Yeah, PR is going to be a no. But Procter and Gamble, that thing's been in business for over. Oh hell, look at that. Look, here's the high. Look at this. Turn around. I love that right there. That looks awesome. What do the numbers look like? Eric Tort, the Greeks really do not. With James's strategy, you are buying the stock, selling the calls at the money, which typically around 50 delta. He's correct. Okay, it's usually around a 40 or 50 delta. All right, so if you guys are really concerned, sorry, somebody on YouTube was asking about the delta. All right, so let's keep on going. Are you trading in blue chips or penny shares? No, strictly blue chip stocks. Okay, I want companies I grew up with that I know. Okay, how about never heard of it? Okay, Joe rocks. Joe, where can you find if a company has trading weeklies? Uh-oh. CBOE, Chicago Board of Options Exchange. Reading your books and coming here till the course is done. Vincente, thank you. Okay, I mean, I wrote 14 of them. Book number 14 is not up yet. I probably should. I keep saying that, and I've been saying that since last February. I got to get my book up. Anyway, Procter and Gamble 162. Well, the 162 is going for 167. That's definitely your 1%. If you like Procter and Gamble, but look at the chart. Let's open this up to take a better look. Okay, a year ago, wow, way down here, 146. Look at the movement for Procter and Gamble last year. That's nice. Gets to here, pulls back, back up, back down, and now she's bouncing off of this. See, here's your high of the year. Now she's pulling back. Okay, now she's going back up. See, all your profit taking for the people who bought along here. Here's your high, profit taken. It brings it down to here. Turns around, goes back up again. That's ideal. I love that shit. All right, so let's take a look. Here's the last 90 days. Same thing. High, low. Where was it? Where is it? What's the direction? Up, down, up. Really? That's awesome. It's actually that easy to read. 20th right there. Here we go. 30 days ago. We're right here, 169. She shoots up to 171. Drops down to 157. 1, 2, 3, 4, 5 days. 5 days to the upside. Look at how much room this thing has to go. Yeah, that's a hell yes for me. I'm actually going to write that one down. Procter and Gamble. All right. Ford is on the list. We wrote that down already. WPC. WPC. What the heck is WPC? Never a good sign when I got to say, what the heck is that? And we still have a whole bunch of questions to go. GPC. Oh, Jeff. Thank you for the happy birthday, Jeff. Okay? GPC. Now, you guys are going to love this company. GPC. Genuine Parts Corporation. They have increased their dividends to their shareholders. Are you ready for this? About 70 years. That's 7 decades. Consistency. Every single year, higher and higher and higher and higher dividends. None of this up-down crap. Consistently higher and higher and higher dividends. but I don't trade GPC because it has monthly options only. Sorry. Thoughts on Spotify? You mean Spotify? Yeah, it's not 20 years old, dude. No way it can have 20 years of increased dividends. Okay, Joe rocks. This is like the 5th time. Is there a company called GAY? GAY. Wow. There is. Imagine that. And it's going to be a no. It's a penny stock. No, thank you. Richie, Discord. Yep, I have a Discord. Thoughts on Intel? Love Intel. Wait a second. What was that question? Thoughts on Intel or Ford? Ford's are on 6% dividend. Yeah, I know that. But Intel, I love Intel. INTC. INTC. All right, we'll get to that. Hold up a second. Can you look at WPC? This is the 3rd time he's asked. WPC. It's like, Dash, do you even pay attention to what I say? WPC has monthly options. No. All right. I just watched T3 with my son tonight. Oh, that's funny. Carol, how are you doing? State Street. You actually got to give me the ticker symbol. Bring Dad. You signed up today? Cool beans. We'll see you tomorrow morning. Okay, Joe rocks. Dude, when I ask you, ask the question once. So this scale is considered to be dividend stocks, correct? Well, I have about 2 million in Amazon. Well, I feel bad for you. Should I sell and diversify? I can't answer that question for you, Father Frag, only because I have no idea who you are. I have no idea what you're looking for. Okay? I have no idea what your risk parameters are, so I can't tell you what to do. But I'm glad you got 2 million in Amazon. Good for you. Can we do CVS, please? Well, CVS is going to be a little bit of an issue. CVS. And here's the reason why. See this right here? 30-day high. Nope. I asked those about 30 minutes ago. Yeah, see, don't feel bad because there's so many people here, all the questions, I can't get to all of them. Oh, Caldwell Cutie. Uh-oh. When the stock goes down, how about SMST options? It's a monthly. Okay, dude, I don't do monthlies. When the stock goes down, you keep doing options on the stock till it sells. Absolutely. Good question there. All around 2024. He definitely will call me and talk about stock situation for real. He called me on Sunday. Yes, me and Caldwell Cutie had a nice long conversation. STT. What the heck is STT? STT. Oh, it's a hell no. Okay. What the hell are you thinking? Jade, SCHD. Please don't ask me about that one. Now, Jade, when I ask people, okay, when you buy something, you should, really should take a look at all of the numbers. Now, for those of you who don't know, let's do this. You ready? Now, I feel bad. This is the 2nd time somebody asked about this piece of crap, and I'm allowed to say piece of crap because I've looked at it many times, and yes, SCHD is a piece of crap in my humble opinion. And it's just my opinion. If you like it, great, more power to you. But here we go. Let's take a look at the dividends for SCHD. And I'll tell you why I think it's a piece of crap. You ready? Now, remember, with a dividend, if the company is consistently profitable, the dividends should increase year after year after year. Okay, so let's see how many times SCHD has increased. You ready? Here we go. 2011, 4, 5, 7, 8, 9, 10. Hey, that looks pretty good so far. 10, 9, wait a minute, 10, 9, it went backwards. 10, 11, 13, 11, backwards again. 12, 9, backwards again. 14, 12, backwards again. That's 4 times. 14, 16, 18, 18. 20, 21, 17, 5 times. 23, 21, 6 times. 23, 20, 7 times. 22, 25, 27, 25, 8 times. 8 times this thing went backwards. Okay? I might, let them squeeze away with 1 or 2. 8? But hold on. Hold on. It gets worse. It really does. All right, let's go to the summary for SCHD. Okay? Summary. Come on, come on, come on. Here we go. Here's the summary for SCHD. You ready? Okay. Here's the little chart. Here's the previous close, the high, the low, all that kind of nice, neat, fun stuff. Look at this right here. The yield, 3.64. 3. 3.64 for the year, not for a week, not for a month, not for a quarter, for a year. You're putting your money in SCHD and you're getting 3.6% per year. I'm showing you how to simply, safely, predictably, consistently get 1% per week. That comes to over 50% per year. And you're not the first one tonight who asked me about SCHD. Yeah, hell no. For me, if you like it, you like getting 3.64%, more power to you. Have at it. ICE 17. I was about to ask about SCHD. So, yeah, you don't want to do that. She's fine, qualified, so that's the best part. Yep, JEPQ. Really? ICE, do you really want me to take a look at JEPQ? You're going to get the exact same answers you did with this, because it's just as much as a piece of crap as this one. It's one of those stocks, okay? Now, there are certain stocks, certain ETFs, that you have these companies trying to ram down your throat. It's a piece of crap. It's paying you 3 crap per year, okay? And was it JEPQI, JEPQ, JEPI? Yeah, all those. Yeah, crap, and double crap. Polyswarm, please. You have to give me a ticker symbol. Do you think crash tomorrow? Bank Japan rising rates and so on. Okay. Missed that question. Missed the question over here on YouTube. What is the book value of Wait. He wants to know the book value of this thing? It would be under statistics. Where the hell? They don't have statistics here. Profile, options, holdings, performance, risk. That's weird. There is no book value on this. Well, isn't that weird? Related, blah, blah, blah. Well, now that's weird, because most other them have statistics. This one, there's no statistics. All right, well, I don't like it anyway. The numbers just don't work. Thoughts on Polyswarm? You actually got to give me the ticker symbol, because Robert, I've never heard of Polyswarm. Sorry. Depends on your tax bracket what I need. Okay, ICE, you, okay. Don't. When a stock goes down, you keep selling, yep. Do you take money out each week on your 1% or just keep on? No, dude. I actually take money out every single week. When I say I live off of the interest I collect, see, you're going to get to a certain point. You all are. You're going to get it. You're going to get to a certain point where it comes time to retire. You got to think of where's your money coming from. Well, you're either going to give it to a money manager or a ETF, and they're going to give you a certain amount every year. They call it a 4% draw. It means you have to take a certain amount every year. Well, no, I don't play that game. Sorry. I trade 1% a week at 1% a week, and I usually spend most of it because that takes care of all my bills. What website do I go to invest? Royal One. The website that I'm using is Think or Swim, and it's through Charles Schwab. Okay. Oh, don't. Sam, thank you for the lesson. You're welcome. So, best of the best return on dividend. What stock? Okay, dude, I don't work that way. VOO? Oh, hell no. Seth, come on. You really want me to do the exact same thing? VOO is just as bad as SCHD, JEPQI, JEPQ, whatever. All right. Show us an example of a company that meets your requirements. Oh, well, that's easy. Let's go to Ford. Here we go, yo. All right, first and foremost, everything I want to see is going to be right here. 5 things I'm looking for on the 1-year chart. The high, the low, where was it, where is it, and what's the direction? Up, sideways, up, down, sideways, down, up. Okay, that's the 1-year chart. Now this area right here is the last couple of weeks. This looks pretty interesting. You probably can't see it right here, but let's take a look at the numbers and see if the numbers make sense. Well, currently, I gotta open this up a little bit more. This way, there we go. Currently, $10.30. Well, the $10.50 is going for 5 cents. That's gonna be a no for this week. Okay, the 10 is going for 26, but I'm losing 30. Nope, it's not gonna make it either. Now next week, because there are only 4 days for this week. Okay, the 1050s, because it's at 1030 right now. The 1050 for next week is paying 9 to 12. So that's just right around 1%. So no to Ford this week. Sorry. Let's try Macy's. Love Macy's. Okay. Let's take a quick gander at Macy's. Are you ready? 5 things. High, low, where was it, where is it, what's the direction? Up, down, drop, sideways, up, down. Okay, that's overall. Let's take a quick look at the numbers. So currently, Macy's is at 14. If I buy Macy's tomorrow morning at 14.01, the 14 is going for 26 cents a share. Now that is just a tiny bit below 2%. So let's see more on the chart. Is it the right time to buy? All right, so a year ago, Macy's was at $17.92. The high of the year back in mid-March was $22.08. The last 90 days, which is the last 3 months, your live keeps buffering. Must be the internet. Yeah, the funny thing is, so, talk to somebody over here on Instagram. The funny thing is, okay, the router for the Wi-Fi is 6 feet away. So explain to me, out of the 6 iPhone cameras I have, why is only one of them having an issue with the buffering? And that's the one on Instagram. So is it the Wi-Fi, which is 6 feet away, because all the other cameras are working fine? All right, let's keep on going. Ford, here's the last 90 days, the last 3 months. High, low, where was it, where is it, what's the direction? Sideways, up, down, it's bouncing right here. Almost a perfect spot, because your 30-day high, your 30-day bottom, 2 days to the upside. Freaking perfect, in my humble opinion. But that's just my humble opinion. All right, so I'm writing down Ford for tomorrow because I like the way it looks. M is good, but not hit bottom. Wait a minute. That's M. That's not Ford. M. All right, so let's take a quick look. That's the 90 days, the last 3 months. So let's zoom in and take a look at the last 30 days, because the last 30 days gives me a better idea of where this thing should be going. All right. Here's the last 30 days, okay? 4 weeks, 30 days. 16 jumps up to 18. From the 18, it drops all the way down to here. Wednesday is the 30-day bottom. Thursday higher, Friday's higher. So what does that mean? That means if tomorrow this thing opens higher than $13.99, I'm buying some. But that's me. That's not a suggestion. That's not a tip. That's nothing other than me telling you I am buying Macy's tomorrow. All right, let's take a look at it. You ready? Let's get rid of this. Let's change this to a covered call. And remember I said I like the 14s because currently right now the stock price is 14. Right there. That's the current price, $14.01. So if I buy it at 14, I'm paying $13.75. Okay? It's all good. Just go back to TikTok. Maybe it's Instagram. Yeah, could be. All right, I'm going to change this to just one contract. Makes it easy for everyone. Okay, and market order because I want it filled instantaneously. Now, market orders are filled right away, first thing in the morning. Say 9:30, I buy the stock. 9:30:01, I'm in, I'm out, and I'm just sitting and waiting. Okay, here's the order. Let's get it sent, confirm and send, and let's read it. Buy one covered call Macy's 100s, that's the weeklies. 24 January 25, that's this coming Friday. The $14 call strike against Macy's at the market to open. The next line down is my break even, $13.70. Well, the stock is currently at $13.99. If my break even is $13.70, well, this Friday, as long as she's above $13.70, I'm good to go. But if it's above 14, because remember, I'm selling the $14 strike price, and I'm collecting this right here, $30 per contract. Well, it may not sound like a lot, but let's do the math. Let's bring up the calculator. Okay, clear this out. The profit is $30 right here. See, maximum profit, $30. Okay, and I'm going to divide it by the cost of the trade, including commission and fees. Okay, $1,370. Divided by 1370, that's for one contract, and it comes a grand total of 2.18. 2.18% for 1 week, 4 days, Tuesday, Wednesday, Thursday, Friday. Okay, so if I buy this tomorrow morning, sell somebody the rights, not the obligation, that means they can if they want to, they don't have to if they don't want to buy it from me at $14 by this coming Friday. They have the right, they don't have to if they don't want to, but if the stock shoots up, they can buy it at 14. Where's the drawback? Well, the drawback for me is if this shoots up to 15, 16, 17, well, I'm still selling it at 14 because I entered into this contract which tells me how much am I going to make. Well, I'm making 2%. Do I really? This is hard for everybody to absorb and to understand. If this stock does jump from where it is now, $13.99, that's the current price. If it jumps from $13.99 and goes up to $18, what do I get? Well, I get $30 per contract. That's it. I don't get all that stock appreciation because I made up my decision earlier. I'm looking for that 1% consistently, predictably, safely, every single week, 1% or more. Well, this one is giving me 2%. Fine. I do Macy's every single week if I could. Now, I didn't do it. Hold on, let's get out of here. Now, I usually do Macy's every week, except for right here. Okay? The end of the year. Because she shot up so much. Now, I was trading it here, but as soon as she shot up here, I took my profits and I said, all right, I'll see you the next time you're down in this area. And guess what? It's down in this area now. It wasn't here 3 or 4 weeks ago, but it's here now, and it's giving me 2%. So, hell yeah, I'm going to be buying me some Macy's. All right, so 11:15, we've got 15 minutes left. Like I said earlier, I like to answer each and every single question. So we're going to hold back a little bit on the stocks and we're going to start answering questions. You ready? RSP. I have no idea what the hell RSP is. RSP. Wow. Oh, it's an ETF. RSP. RSP. Okay. This one doesn't have it either. Okay, come on. RSP historical data. Okay. Historical prices. Dividends only. I want to see all the dividends. What the hell just happened? Come on. Okay, here it is. Dividends only. All the dividends. Here we go. Here's all the dividends. All the way back to 2003. So we have 20 years of dividends. Let's see if they consistently increase. Because that's important to me. Are they consistently profitable? That means every single year, do they make more and more money? All right, well, let's take a look. 15, 10, 8. Wait a second. That's 3 right in a row that are down, down, down. Yeah, no, because that's 2. Okay, 9, 11, 9. That's 3 times it went down. 9, 11, 15, 11. That's 4. 13, 12. There's 5. 17, 10. That's 6. 16, 20, 17. That's 7. 16. That's 8. 18, 14. That's not 9 times, and we're not even into 3 years. Yeah, hell no. Sorry, dude. Let's go back to these questions. So RSP is a hell no. Sorry, dude. Rashma, Moderna, mRNA. mRNA. Not quite yet. You see where it is? Here's your 30-day bottom. It went up, came back down again. Not quite rising. Okay, keep your eye on it though if you like Moderna. Hi, I'm from London. Are you what we call shorting stocks? No, I don't short stocks. I'm looking for a simple, safe, predictable, consistent 1% per week. Every single week. That's over 50% per year using nothing but pre-qualified dividend stocks. And stock options. All right, so let's keep on doing this. Thank you. Where was I? Reselling calls, got it. You, got it, got it. Weekly contracts, got it. Are you selling a class or just showing people what you're doing? Oh, yeah, you're the second person. Oh, wait a minute. The second person asked me if I'm selling something tonight. I'm not selling anything. I'm just teaching people what I do. PLTR, hell no. Thoughts on O? Cappy boy? Oh. Love for you to look at SLB. Ooh, SLB. That's Schlumberger. SLB. Well, we're under 200. So if we are under 200 at 11:30, done for the night. See, I'll stay on if it's over 200 because it's only at 138. Yeah, so you guys got to like, comment, share, you know, all that kind of crap to get the numbers up. Yeah, because if we're under 200, I'm out of here. So, O, Realty, hell no. Dude, okay, this is for you, Cappy boy. O, Realty. Have you honestly looked at those numbers? Now, what I'm talking about the numbers. How consistently are they profitable with their dividends? Do they have weekly options? I know they pay monthly dividends, but there's a reason why they pay monthly dividends. Because they're giving you crap on the rate of return that you're collecting for the year. Let me quickly do this. Okay, O Realty. There's always somebody who wants to look at O Realty and Palantir. Okay, you ready for this? Are you ready for this? 2003. Here we go. You ready? 2003. 9, 10. 2003, it's at 10. 2004, it's at 10. So it's 2 years, no increase. All right. 11. 2004, 2005. 2006, that's 3 years. 3 years, then they increased to 12. Okay, 2006, 12. 2007, okay, then it went up to 13. 13, 2007. 2008, 13. Okay, 2008, 14. 2009, 14. 2010, 14. 2011, 14. 2012, 14. 2000, okay, so 5 years. No profit increase in 5 years for O Realty. Hold on. It gets worse. Okay, 2012, 15. 2013, 18. 2014, 18. 2015, 18. Okay, then 2016. So 3 years. So 5 years, no increase. 3 years, no increase. 2015, 19. 2016, 20. 21. 2017. 2018. Okay, 2019. 2020. Wait. 23, right here. 2020. 2021. All right, 2 years. Okay. 2025, 21, 22. Okay. Okay. All right. So, O Realty. 3 years. 3 years, no increase. 5 years, no increase. 3 years, no increase. Within the last 20. Out of 20 years, 3 years in a row, no increase. 5 years in a row, no increase. And then 3 years again, no increase. But wait, it does get worse, believe it or not. So let's go over to summary. What is the yield for O Realty? What kind of rate of return are they giving you? Where is the yield? What the heck? The summary, where's the yield? There is no. Oh, there it is right there. 5.8. The yield. 5.8%. You do know that the federal government pays 5% on their, what do you call them? On the treasury bills. 5%. This is paying 5.8. And it's a monthly. So you can't get O Realty. Okay? Now, you can't get weekly income from a monthly optionable stock. That's number one. Number two, they're not consistently profitable every single year. Number three, the yield is only 5.8%. So why would you put your money into O Realty? You know, you're getting 5.8%. Fine, wonderful. It's better than a CD. Palantir is going to be the same thing. That's going to be a no. So let's keep going through these questions. I love Dory. You're back again. So I remember you were here before. I remember that name. Do you have suggestions for a tax strategist or someone that is an expat? Ooh, cool. James, could you please look at shop? Hell no, before you end tonight. If it's too late, we can do it tomorrow. Okay, Angel 1, shop, S-H-O-P, that's Shopify. Shopify has not been in business for 20 years. There's no possible way Shopify could have 2 decades of increased dividends. Sorry. TSLA, Tesla, no. They don't have any profits sharing. No, for Tesla. FedEx, ooh, Colby, I like FedEx. Simone is in the house. We're getting down to our last 5 minutes. Let's see if I can go for the rest of these questions. CFR, no. CLM, no. AWK, no. That's a no. Yeah, Angelo. Sorry, dude. AB Financial, never heard of them. Are dividends worth it if the cash comes out of the stock price? Hold on a second, Aiden. Learning a lot, thanks. What's up with weekly paying ETFs? Like Roundhill, XDTE. I never knew there was an ETF paying weekly options, weekly dividends. I didn't know that. FDX. Wait, what did he say? Hold on. XDTE. Really? XDTE. XDTE. That's monthly, dude. Hell no. Okay, Aiden. Are dividends worth it if the cash just comes out of the stock price? No. You have a misconception there, dude. A dividend is a portion of the company's profits they pass along to the investors. Now, yes, you are correct that the stock price does go down after the dividend is paid. That does not mean it comes out of the stock price. Okay? A portion of the profits. Okay, back in the 1600s, okay? It was the late 1580s, 1590s. You get a couple of Dutch businessmen got together and said, hey, let's create the biggest company the world has ever seen. Okay, it may not be the exact terms they used, but they did go door to door asking people, hey, if you invest in this new business venture, we will share the profits with you. You will get a profit for each share that you own based on the profits of the company's endeavors. That was the very first dividend stock company, VOC, also known as the Dutch East India Shipping Company. Now, they did run for 198 years and paid an average 18% for 198 years. That's a long time. 198 years, and they average 18% per year. So a dividend is a portion of the company's profits passed along to the investors. Not much has changed. If the company is profitable, they will take the profits and they either give them back to the investors or put it back into the company for capital growth. If you're looking for capital growth, you're in the wrong place. Sorry. Okay, so out of time, let's take a look at Walgreens. WBA. All right, so we have less than 200. It's 1 minute away, so it doesn't look like we're staying late, but I am going to finish up with the questions. Will stock jump up tomorrow? Yes, they will. See, the funny thing is you didn't ask me which ones. What stocks are XRP? Hell no. XRP is not a dividend stock. Sorry. Assemble AI, you actually got to give me the ticker symbol. XRP is not a dividend stock. Have you sold Pfizer yet? I don't have any Pfizer. Okay, Truth, WBA, I love WBA, I do. When you get a hell yes, do you stick it to your 20% or go in a little more? No. Okay, ProdTech, I like to do 20% on each trade. Okay, 5 trades, 20, 20, 20, 20, you know, it's 100%. Okay, 98% of all my money is invested at all times because I believe in the market. If you have $500 to invest for the first time, what you doing? Well, I would do dividend capturing and I'd separate it into 5 stocks, 100, 100, 100, 100. Okay, dividend capturing is a little bit different. There's a whole bunch of videos available on YouTube. Check that out. How many more questions do we got? Hey, James. Hope all is well. 86. What's happening? Texas brown-eyed girl. So, when you sign up on your website as a student, will you teach us exactly how this works? More one-on-one? Well, here's the thing. Okay, there's like 3 different levels. One, it's like you get copies of all the recordings, and you get invited for Tuesday, Wednesday, Thursday. Not the important days, but the important days are Monday and Friday. It's when I buy and when I sell. Okay, the days in between, those are more or less balancing. Okay, what did I buy it for? Where's it at now? What's it look like for tomorrow? That type thing. Now, you can stay later after everyone else is done and ask questions. And yeah, it can be one-on-one. Yes, I do work one-on-one as we progress. What website do I go to invest? Royal One. I'm not quite sure exactly what you mean by that, but okay. Don't. Thank you for the lessons. You're welcome. Juan. So best of the best return on dividend. What stock? Can't answer that one. I have no idea what you're looking for. Seth, I'm going to tell you the same thing I told the other people. VOO, hell double no. Show us an example of a company that meets your requirements. We already did like 4 of those tonight. Okay, Roshna, Moderna, we'll have to take a look at that tomorrow. mRNA. Wait a second. We looked at mRNA. That was a no. RSP, where we looked at that, that's a no. RSP is a no. Not for me, anyway. If you, San Francisco Bay Area, I would like to meet with you and learn from you. Well, it's going to be a cold day in hell before I go to San Francisco. Not from the crap I've seen on TV. Okay, spring 2025, send me a DM right up here, okay? Click on right there, Dividend Stock Talk. Click on there, send me a DM with your phone number. I'll give you a call. Can I select a lot to write a call on for stock I own? Yep. Is it FIFO or LIFO? Papa Louse, your best bet. Drop me a number. I'll give you a buzz. We can chat about it. What happens if Macy's goes down to 15? I have no idea where Macy's... Wait a minute. Macy's is at 13 at the moment, isn't it? Or is it 16? Macy's is at 14. Okay. Macy's is at 14. Okay. AWK, American Water. I think that's what AWK. Okay. Vitaly Cherenek. What do you before during dividend week? Wait a minute. What do you before and during the dividend week? I have no idea. That doesn't make any sense. Sorry, dude. What do you before and during the dividend week? Thank you, Rashna. Okay. He knows his stuff and honest. Thanks, Rob. Thank you, Honeybee and me. You're doing a good job. Thank you. RKLB. What? Rocket Labs? Hell no. They're not been around. Ooh, Lindarella. I like Riley too. I got that in a bunch. Been in Mexico, relocating from Atlanta. Okay. Thor. Altria. I actually have some Altria Thor. Okay, but we're a little bit late. JP Morgan. Ooh, I like JP Morgan. Do you need to own the stocks you place calls on? Yes and no. Okay, for you, you're brand new. Yes, you do. Somebody who's been in business for a long time who has no problem writing naked calls, yeah, they can. Do you have a long-term investments or 100% investment for your weekly strategy? Great. Okay, Raphael, here's an idea for you. You ready? Oh. How do you pronounce it? F-E-D-E. Feda? I don't know. Halliburton. I like Halliburton. I actually own some Halliburton. We'll take a look at it tomorrow if you jump on early enough. So, Raphael, 100% of all my, well, sorry, 98% of all my money is invested at all time. I believe in the U.S. stock market. I believe in the U.S. economy. Every single company you see me buying, Ford, General Motors, IBM, Macy's, Nordstrom, Kohl's, Walgreens, Mobil, British Petroleum, every single company I buy, you probably heard of. I don't do anything I've never heard of or I don't understand. Hi, James. Happy Trumpy Bunch Day. That's a funny one. So that being said, I don't do anything long term. My idea of long term is 30 days, 3 weeks. Oh, sorry, yeah, 4 weeks, 30 days. That's my idea of long term. Okay, I invest for money, for cash flow. I don't want to buy something and wait 10, 15, 20 years. Yeah, no, sorry. All short term. Ludwin, M is good but has not hit bottom. Ludwin, yes, M has hit bottom. We looked at it already. Okay, bottom was 2 days ago. Tyler, yikes. Okay, so here's the thing. It is 11:36. I will be back here again tomorrow night. Same bat time, same bat channel. Y'all come back now, you hear? I don't know if you guys remember where that's from. One was Batman and the other one was from the Beverly Hillbillies. Y'all come back now, you hear? All right. Bye over there in Facebook land. Okay, Instagram, you guys have a great night. Thanks for chiming in. And now the end is near, and so I face the final curtain. My friends, Angelo, you're welcome. I'll say